Let's start with an email from Don. It's on General Electric. What are your views on GE? Do you want to own this, or UTX, or Honeywell?
So in our strategy, it's all about identifying the key themes that are working in the market. Because the market rallies tomorrow, you want to participate. And what we would say is over the last number of months, the industrial sector has been underperforming. And I think largely because a lot of them are multinational companies that sell around the world. GE, of course, is one of them. So at the point earlier in the year when it looked as though there was some sort of more coordinated growth around the globe, GE looked more attractive. When you look at GE's business, over 50% of the revenue comes from outside of the US, and they've made a big bet on the utility business, gas turbines, and so on. They recently made another big acquisition in that area. So stock's underperforming a little bit. I would prefer to focus on something that's a little bit more domestically focused. But frankly, I don't think there's a rush to be buying machinery and heavy industrials. I think there's better sectors to focus on, more consumer related.
Right. You said you're de-emphasizing industrials. Is there, or are there a few that you own, however, in that sector?
Really, we own very little in the industrial sector. If you looked at purely what is industrial, you know, the rails fit into that camp, and we do own CP and CNR, and I think they both look tremendous, and they benefit. See, you want to find sectors that benefit from some secular shift in the underlying economy. What is it that could have a natural advantage going forward? And of course, the transports are, get a huge win from falling energy costs. And so whether you're looking at that or looking at one of the names actually we'll talk about later, falling energy prices in a relatively stronger economy looks pretty good. The rails, of course, are more focused on domestic economy. Specifically, I think CNR is the one that I like the best.
Okay, David, let's talk to another David. He's in Truro, Nova Scotia. Hi there.
Hi, thanks again. I just wanted to ask Mr. Burrows about pipelines. I know I'm taking it on the chin on my oil stocks. The pipelines have done pretty good, but they're getting hit. I don't run with stops, and I just wanted to know what your feelings is. Should we continue to hold the pipelines or take a little bit off the table or what? Thank you. Bye for now.
So, David, I think that's a question a lot of people have. These have been really the golden goose over the last 3-4 years, and these have been a big part of our portfolio. So in our income portfolio, about 20% of our portfolio is focused in midstream energy infrastructure. Of course, some of the pipes fit in there. We believe that this is the least price-sensitive part of the energy complex. And we believe the reason that prices are coming down, one of the reasons, is this boom in production in the U.S. So the U.S. has become the largest oil producer in the world in the last 5 years after 4 decades of declines. The technologies that are being used to find oil and gas are extremely cost competitive, and the price at which they're finding oil today is way below current prices. So we don't think that's going to stop the hunt for more oil, and so we think the volume growth will continue. So certainly the pipes are being impacted a little by this weak energy price because there's a halo, it's in a similar sector. But we think really it probably provides a very good opportunity, and we'd be a buyer of things like Pembina and things like Keyera.
And things like maybe this company coming up next. Here's Jim in Massey, Ontario. Hi, Jim.
Hey, Mark. David, they say never to average down. This is considered a pullback. Would you buy AltaGas here, and what would be your stop loss?
Thank you. So I think that AltaGas is sort of sitting on support here. It's important to see things hold in and around these levels. That being said, their business over the last couple of years has become more regulated as their generation business has become a bigger part of the business. They've got a big pipeline of opportunities going forward. So I'm not a big believer in averaging down if a stock is broken down technically. We have no problem buying pullbacks within trend. And I think that most of the energy infrastructure companies are simply pulling back with market and in some sympathy with energy, but we aren't seeing them as being technically broken. And so I have no problem buying this here.
Most of these are still above their 200 days, aren't they?
They are, and look, they've had a tremendous run. They do have to have pullbacks. Stocks don't go straight up. But I would have no problem buying the stock.
We had a profit warning out of AGCO earlier in the week, a competitor with Deere and a competitor with this next company. Dorothy in Toronto has a question here. Hi, Dorothy.
Hi there. My question is on United Rentals. I was thinking that that would be one company that is a good place to be because the majority of their revenue is in North America, but it took quite a hit yesterday or the day before, more than the market. And I'm wondering if there's anything else underlying that's driving it lower at this point.
Right. I think really, there is a concern around companies that are tied to the economy. And in a sell-off, lots of things get impacted. I'm not going to say that the market's wrong because the market generally gets it right. I know that we've been stopped out of our United Rentals.
Have you?
United Rentals really is tied to the non-residential construction market, and it looks actually quite robust. So the fundamentals here look quite good. It is more U.S. focused. That being said, we can't ignore price. And so in our strategy, we've just chosen to stop our way out of it. Sitting above the 200-day moving average is probably okay. We don't see anything fundamentally wrong. I would like probably to see it turn around a little bit before I would consider putting fresh money in here.
And as we saw on the chart there, pretty well a quadruple in the last 5 years or so. Bill's in Brampton as we get into some of these consumer discretionary. Actually, we're taking a break here, I guess. We'll take a break and we'll come back with a question on Starbucks after this.